Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis update for commodities. You're going to get my financial opinions. We're going to work our way through the dollar, yields, precious metals, and the commodities and ETFs that I follow. I just changed it up so it goes in that order specifically. We've got a lot of lightning going on behind me too, so if you hear some booms in the background, that's what it is. But let's dive in. Let's take a look. And if you guys need any help with anything, definitely check out finding-value.com, where I talk about individual companies and also my portfolio and what I'm doing and buying in the portfolio. And again, we've got a 5 p.m. Mountain Standard Time Sunday question and answer session. So DXY, we are launching higher today in the dollar. It's been moving on up. We thought that that could be a potential outcome, bouncing off this support region, moving higher. So we are bouncing off of long-term support. We are moving on up. Could the debt ceiling have something to do with this? Very well could, as they do not print money or paper dollars. If they don't print or if they don't increase the debt, dollars become more valuable because that is what is required to pay down debt. The interest rates continue to move up. I'm going to start with the 2-year yield, up 2.31% on the short end of the curve. It's moving on higher. We've got the 10-year also moving on higher, 1.93%. So not as much as the 2-year, a little bit less for the 10-year, but again, we are moving higher in yields. And that is where I think we could potentially go, especially with this debt ceiling thing going on. And then we've also got the 30-year yield going up, but not as much, 0.64%. Keep in mind that the short end of the curve moves more freely. It's more volatile in the short end than generally the long end of the curve. But this, to me, looks very good for a move higher on the 30-year, looking at it from a weekly candlestick basis. Yields generally going higher means that the dollar generally gets stronger because monetary tightening means dollar strength for the most part. The TYX-TNX ratio falling back down. So generally speaking, guys, when there's something wrong in the market and fear kicks up, we go higher in this ratio. Now, the debt ceiling may have an impact on this. So we could see temporary strengthening of the dollar, temporary movements in yields. And they may or may not be a function of the market. It may be the function of the debt ceiling. So just keep that in mind. So that could have an impact short term on precious metals and the way that they are moving based off of the way that the yield curve is moving. Bond prices continue to sell off, selling lower, breaking out of this little support line. And we could see that going forward with weaker bond prices. That's what it looks like. And we've had a pretty big sell-off since the top here in 2020 all the way down. So again, prices move inversely to yield. Gold prices, we've got stronger dollar and higher yields. It's not going to like that. So it's been selling off here these past couple of days to the downside. We are still above support at 1915, 1920, 1930 in that general area. Everything still looks fine for gold. Silver, same thing. We are coming back just like gold is. But gold still looks good. That's our big daddy up there. Silver's just a little guy. And yeah, it's pulling back a little bit. Still looks fine. Just be patient. Platinum pulling back as well, down $21. Are we putting in some sort of pattern here? Very well could be. But overall, guys, with that strengthening dollar, it puts a lot of pressure on these dollar-based assets. The XAU to gold ratio, this is gold and silver mining companies in relationship to gold, did sell off today even further. So we came back with the momentum coming back up throughout the day. We've got the commodity index continuing to grind its way higher slowly in this short-term area. but we were down slightly today, down 0.24%. Bigger picture view, this is what it is. This is wave one. Wave two will have some sort of pullback, and then wave three, we will be ripping again. Are we done? Is it going to turn here? Is this the final move where we start to ramp up? I don't know, guys. The short term, I don't, a lot of people, they look for short term clues, but that's not where you make your money. You make your money on the big long term moves. The short term isn't predictable enough to get you the probability of success that people want. That's why Warren Buffett, Peter Lynch, all the best investors take a long-term approach. The short term's a lot harder to read, but to me, this still looks good to eventually turn and move on up over time. The CRB to S&P 500, again, slightly lower today, and we could go lower, but we're at that 0.618 level here where that generally pulls back to and gets support. It doesn't mean that it can't go all the way down to a 0.786 level and gain support there and then have that be the final basically washout move. We'll see. We'll see what happens. GDX down 2.6%, but it is a hammer candlestick, which means we could try to give a little bit of bounce here, but we've got some downside momentum. That goes across the board with GDXJ as well and on SILJ. They all are similar. Momentum's down. We're trying to find support. And with the debt ceiling, some of this stuff may continue a little bit lower in the short term until we get a resolution. That could be strengthening dollar and strengthening yields, which is negative for precious metals because you've got real yields kicking up. Crude oil down a little bit today. Again, I still think this looks fantastic to try to put in a base for a sideways move to slightly higher move here in the short term. And I think hopefully that we are trying to put in a longer term bottom here where we could eventually get through on logarithmic. I'm not going to hit it, but where we go through logarithmic here. And then we basically hit our trend line there and work our way higher. I think we're close. Natural gas, ripping it today. We're up about 10%. I was talking about this resistance line going through here. That's a resistance area. Guess what? We punched through it. Natural gas punched on through it. Hopefully the momentum can continue. Could we come up to $3 or greater and then do another kind of turn? Yeah, we could do all sorts of things down here. But natural gas, obviously looking a lot better today. Getting some green army showing up. XOP, yeah, you know me, heading higher today, up 2%. Now, here's something to think about, guys. I talked about this. Bullish engulfing, bullish piercing, came up against resistance, turned over. Now we're back to that starting point. Good spot to be looking for potential buy points in this area. We're getting green candle, army coming up. Oil's getting a little bit stronger. Natural gas punched through today. We could punch through here if it decides to go. It's looking better. Same with OIH. It is looking better. Hopefully we can punch through here. Now, does that mean I predict that's going to happen? No, that doesn't mean I predict it. It just means it looks better for that to happen. So hopefully we punch through. And again, we were up on a down day on crude. That is huge. There's positioning going on in these areas. Sprott Physical Uranium Trust getting a little bit more selling pressure. Could we see some more downside? It looks like we could, based off of the chart and the way that this came up with this bearish piercing in the short term. URNM, slightly lower, but it's holding together quite well. And then we've got URNJ up a little bit. So we'll see what happens. Again, I kind of like the way this is trying to set up. I think we could do some grinding or whatever, and then eventually work our way on up. TAN down 1.24%, right on support. Again, we're right at the tip here. COPX down 1.7%. We could pull back a little bit further with this momentum in copper. But again, I'm not playing the short-term movements. It is possible we hit a 30 on COPX if it wants to get down there. But that is possible. Lithium down a teeny bit, but still in this falling wedge, along with REMX, right at resistance in the falling wedge. still looking fine. S&P 500 rocketing higher today. Sometimes when the dollar is strong, dollar assets are strong. Money rotates into the dollar-denominated assets, which the S&P 500 is a dollar-denominated asset, and we could see these go higher. So that's higher, and same with the NASDAQ is higher. Looks actually quite strong to keep moving to the upside. So those both look very good, the NASDAQ and the S&P. Emerging markets moving sideways. Stronger dollar here, guys. Emerging markets likes weaker dollar, not stronger dollar, and weaker yields. XHB looking quite strong today, up 1.74%. We'll see if we can break out of this thing to the upside. Moving slightly sideways. Again, I think this is going to go a little bit lower before we move on up, probably in this general vicinity, $72, $70, somewhere down there. Copper lower today. It's battling back and forth. We'll see which direction this goes. We could be consolidating here. Iron ore, slightly lower. That looks like it wants to continue higher based off of the way that these candlesticks look. You get your big candlestick, you get smaller selling pressure, and it just stair steps its way on up. Nickel down 1%. There it is. And we could see lower nickel prices in the future. We've got aluminum looking like it wants to try to put some sort of base in here. It's been basing for a little bit. And hopefully we can break on up eventually. Baltic Dry Index down 3.5%. But again, I think we are going to grind higher over time. Maybe we get a little bit of a return move here before that happens. Newcastle Coal, slightly higher, moving sideways, basing out. And then Ethereum and Bitcoin down today, down 1% and down 2.35%. Still looks good, still above support for a move higher. It's just consolidating there. But that's what we've got for today, guys. That's what's going on with the sectors. I think energy looks really strong. Oil and natural gas specifically. Stronger dollar, stronger yields. It's going to impact precious metals in a negative way. We need to get this debt ceiling crap behind us. Get that behind us. And we'll see what the general market actually thinks about everything. Because it could be messing with those signals in the interest rates. If we've got weakness in the market, interest rates generally go down, not up, but down. And we should see gold and silver perform quite well. If this is actually telling us that inflation is still persistent, which, I mean, I think it is cooling off. But if it is persistent, then we would see interest rates continue to go up. And oil loves that type of conditions. But that's what we've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. Love to have you a part of the community. And we'll catch you next time. This is Finding Value.